Hello, welcome to Any Answers Answered. This is where Tim and I take a couple of questions from the accountingWEB Any Answers section and hope to add a little bit or just review some of the excellent answers that are already on there from the community at large. A couple of questions that we're going to have a look at this month. Do remember, if you want to get involved, you can post your questions on Any Answers and we'd be very happy to answer your specific question. This month, Tim, our first question comes from somebody called Stelaka, and this question relates to small employers relief. Now, worth actually just reminding us what that is, but her question relates to whether or not we are a small employer in terms of national insurance contributions. Small employers relief relates to SMP and payments to people.
Yes, statutory maternity pay, paternity pay and adoption pay is available more generously if you qualify for small employers relief. Just a very brief reminder of how SMP works. The employer pays 90% of the average earnings as calculated for the first 6 weeks of the maternity period, and then it drops to the statutory rate of about 140 quid a week. But initially it's 90% of the average earnings. And by the way, as I think you're well aware yourself, if the average earnings are for a period that include perhaps a large bonus, then that can have a significantly advantageous effect on the amount of SMP that the employee receives. I'm not suggesting that in a husband and wife company, if the wife becomes pregnant, that her earnings should be increased artificially beyond, let's say, standard director's fees of £8,000 a year. But if they were to be, that could have a very significant impact on her entitlement to SMP.
And the timing of that becomes extremely important.
The timing is important. Yeah. The Revenue have a very useful calculator on their website that will tell you from what dates you can pay this and that and the other. But anyway, first point, employer will pay initially for 6 weeks that 90%, and then for the rest of the 12 months, it'll be the 140 roughly a week. If you're a large employer, you recover only 92% of the total SMP that you're paying. So there is a cost to the large employer, but the cost is only 8% of what they're paying that worker for the maternity leave period. But the small employer can recover 103%. So they get all of the SMP back, plus a 3% bonus, if you like, for having the trouble of administering and paying the SMP. But that small employers relief, which clearly is worth an extra 11%, because you're getting 103% of it back rather than 92% of it back, is only available if you meet the definition. The small employer is the employer whose Class 1 national insurance bill, the secondary contributions, is less than £45,000, well, 45,000 or less. So there is that threshold. It's gone up over the years. Years ago it was 20,000, but there's that threshold of 45,000 of Class 1 NI. Now,
and the question I should say that we've been asked here is that £45,000 threshold is, as you just said, it's the amount that the person pays. Well, if it's the amount they pay, as in write a cheque for, have we already deducted the £3,000 employment allowance or not?
That's the query, because if the company has claimed the £3,000 employment allowance, that will reduce the amount of secondary Class 1 that they're paying. And the question concerned a company whose total Class 1 before the employment allowance was 47,999. Knock off the £3,000 and you get to 44,999. So they actually paid just below the 45,000. Now, given that they actually paid just under the 45,000, can they recover 103%? Answer, no, because the regulation, let me now go back to it and read it, says, for the purpose of this regulation, the amount of an employer's contribution payments shall be determined without regard to deductions that may be made under any enactment or instrument. And that means, even though that was drafted, well, this is the 1994 regulation, so years before the employment allowance came in, I think that would read across to require us to add back the employment allowance. Now, that could be an important administration and compliance point, because I suspect that payroll software will simply give you the net payment of Class 1 NI in determining what the rate of recovery of statutory maternity pay is.
Yes. So the answer, let's just be very clear, the answer is if you're above £45,000, you are not a small employer. And to calculate that, you do not deduct the £3,000, so it doesn't suddenly become 48 because of your entitlement to employment allowance.
That's right.
It is 45,000. And then looking at that, thinking about the bonus that we mentioned earlier on, it's a very rare, it's not likely to happen, but I guess you could be in a position where the bonus payment in that 6-week period was so large as to create a very odd sort of weekly earnings figure at that time. And you could get to a point when 11% was more than the £3,000.
You could. You'd need to get up into bonuses of well over £500,000, I think, to get to that situation. It's very, very unlikely in practice. But that 45,000 threshold is equivalent to secondary class 1 on, what, 300,000 or 400,000 of salary? So we're looking here at companies whose payrolls are of the order of 300,000 or 400,000, who've got employees entitled to statutory maternity pay. Just keep an eye on whether that employment allowance is going to upset it.
If you are close, it is well worth a look. Our second question this month comes from a wonderfully named Ian the Taxman. And Ian the Taxman has asked us a question, yet again, Tim, relating to the £5,000 dividend allowance. It is an area that has become so complicated that people are now starting to doubt themselves on what is quite often fairly fundamental areas of tax. In this particular situation, Ian's client has £5,000 of dividend income, but no other income at all. And they then, in the year in question, have made a disposal resulting in a capital gain of £130,000. The concern here is, what am I including the £5,000? Do I have to pay tax on it? Do I include it in the personal allowance, etc., etc.? Let's just talk people through this one more time. The £5,000 dividend allowance is for the first £5,000 of taxable dividend. Anything inside the personal allowance, you wouldn't include at all.
Correct.
The second thing, which somebody did reply on the comment here, and I spoke to a delegate on a course only last night about this, the £5,000 is always available for the first £5,000 of taxable dividends for a UK resident individual, no matter how much they earn elsewhere. So if it is in the additional rate band, you still get your £5,000.
Correct. Bernie Eccleston enjoys the first 5,000 of his dividends at 0%.
Exactly. As far as capital gains tax is concerned, how does capital gains tax get involved in any way with our income tax calculation?
Answer: gains that fall within the unused basic rate band after doing the income tax calculation are taxed at the lower 10% rate, unless it's a residential property interest gain, in which case it's 18%, and gains above that unused basic rate band are taxed at 20% or 28%. And the tax difference behind this question is 500 quid, because what the question is asking is whether the 5,000 of dividends has to use up some of the basic rate band that might otherwise be allocated to capital gains, and if it were, the gains are going to be taxed at 20 instead of 10%, so there's a 10% differential on that 5,000. It's a 500 quid question, basically, but 500 quid is 500 quid. Now, we do the income tax computation first, and we first will allocate the personal allowance in the way most favourable to the taxpayer. Well, if your only income is £5,000 of dividends, they're wiped out by the personal allowance. That doesn't use any of the basic rate band. So the whole of the 32,000 basic rate band is available to the capital gains.
Okay, let's just change the question slightly. Let's say you had dividend income of £16,000. Then we would have used up all of the personal allowance, and then the 5,000 would start to be within the basic rate band, but would still be at 0%.
Correct. That leaves 27,000 to cover capital gains at 10%, and the balance of the capital gain, I think it was a total of 130, wasn't it? So the other 103,000 would then be at the higher capital gains tax rate of 20%.
Okay. And then one other question which cropped up as part of this, which I think is one of those situations where our brains don't quite work properly because we get so confused by this. Somebody said, well, why don't we actually take some of the capital gain and put it inside the personal allowance to leave the 5,000 left to tax at 0% outside of that, because the personal allowance is nothing to do with capital gains tax.
And indeed, when just giving you those figures of 27,000 and 103,000, I disregarded the annual exemption for CGT. So the 130,000 gain in the question, actually the first 11,100 in 2016-17 is covered by the capital gains annual exemption. That comes off the capital gain before we then allocate the capital gain to any unused basic rate band.
But for the avoidance of all doubt, if I had a £22,000 capital gain,
Yep.
no income at all,
Yep.
of that gain, I get rid of 11,100, but I can't get rid of the rest of it with personal allowance.
No,
That's
the other
point.
10,900 will be taxed at the basic rate.
Absolutely. 2 areas of tax covered, hopefully useful. Do remember to post your questions on Any Answers, and we look forward to having a look through and picking possibly your question next month. But for now, bye-bye.